Hello traders, so the UK spring statement has been revealed. How has it impacted the pound US dollar price? So if we just go to the lower time frames, we can see we've had this kind of back and forth with the pound earlier today and well pretty much the entire day. Yesterday we had a nice breakdown, but you know, this morning 6 o'clock came, sell off in the pound, and then ever since we've just gone completely sideways. So looking at what's happening here, what is going on in terms of fundamentals, well, we can see that we've had the latest impact from the spring statement from the Chancellor in the UK. So UK Finance Minister Reeves has given us that budget update, what has happened. So in summary, we've got economic growth forecast slashed to 1%. That is down from 2%, so it's been slashed in half. Defence spending to rise to 2.5% on GDP. That's pretty good for sort of infrastructure and whatnot within the UK. Inflation set to average at 3.2%. So inflation is meant to remain fairly high. So really speaking, we talked about the fact that the UK could be going into stagflation, and that could still happen. Now, what is stagflation? Well, stagflation essentially is when you have a higher inflation rate, okay, combined with low growth, okay, so low to no growth, okay, and higher, so plus high unemployment. Okay, and this is where the UK is kind of heading down right now. We're seeing that we have a inflation rate that is going to remain fairly high, and then we have that low growth where growth is being slashed in half. So it makes it really tricky. Now, just to kind of reiterate what happened there was some comments as well by head of FX strategy at Rabobank, and we can see that they have mentioned that you know, there was no big surprises in the budget. I think for me, one of the big surprises we were looking at is, was we going to see a tax rise, and that we didn't get that, or any tax hikes. You can see that there was no anticipation that there would be tax hikes this spring, and no tax hikes came. Well, that was where the surprise was going to be. I think if we saw tax hikes, I think that we would have seen pound US dollar down a lot more than this. Now, if we look at just the raw data of what's been going on, there are some important points. Now, we do have retail sales data coming up tomorrow. Now, previously it was at 1.7. Forecasts are suggesting that this is going to be a lot lower this time, maybe even into sort of like the 0.3s. So we could see retail sales coming in even lower tomorrow. Now, what has been interesting is CPI year on year was at 2.8%, but now we're expecting that to climb to 3.2% over the remainder of 2025. Core CPI is still very high. It came down from 3.7%, which is technically a positive there, but 3.5 is not very good in terms of the fact that we're going to see that higher inflation rate. That means that interest rates are probably going to stay a little bit higher. Problem they've got is GDP growth. What is it at minus 0.1% in the recent figures? We can see from the climate count change as well that we started to see a rise. Previous metric was 2.8 thousand. Now we're up to 44.2, and unemployment high at 4.4. So in the grand scheme of things, the data out of the UK is not particularly great. You can see all these reds on here, kind of suggesting that actually this is a market that could be fairly negative in the near future. Now, if we go up to the daily chart here, what have we got? Well, we've come up into that 1.3 handle. This was a level that I thought would be a sticking point for pound, and it's proven to be so. The market is now starting to break down a little bit. You've got this kind of head and shoulders pattern here, potential for the market to trade back down to 127.50 if it keeps up this move to the downside. Looking at the 4-hour chart as well, you can see that in a little bit more detail. You've got that kind of head and shoulders, markets breaking lower. I think for me, if we can comfortably trade below these lows, the kind of 128.50 handle, if we can comfortably get below there, 128, 127.50 looks obviously a lot more likely at that point. The problem we've got against the US dollar is the fact that the dollar is a weak currency as well. The data in the US hasn't been particularly, amazing. So we're starting to see that kind of flow through. Now, one currency that is performing pretty well is the New Zealand dollar. Although it's kind of rejected that 5,800 level, New Zealand dollar's not performed too bad. So I imagine pound Kiwi is kind of flowing to the downside here. And this could be a market that we go and have a little look at for a bit of a breakdown in the near future. Weekly is pretty bullish in terms of trend, but if we see that continual kind of downward trend, we could see pound Kiwi coming back into sort of these kind of areas down through here towards the 2.2s and below. So definitely keep an eye on the situation in the pound with the pound at the moment. I think that data is starting to go a little bit sway towards that kind of negativity for the pound. One market that I did quite like was Euro pound longs. I don't like Euro pound long from here, but we might not get the opportunity to be a buyer down at this key area of support where it's that range support towards the 82.80 handle. So maybe keep an eye on Euro pound as well. Obviously Euro's buoyant from the fiscal stimulus in Germany, as well as the defense spending budget as well. So that to me is still a big positive for the euro. I still feel like the euro can benefit from that narrative at the moment, whereas the UK's narrative I feel is starting to shift a little bit. So we might see euro pound trading back higher here as well. So I'd be looking at it to try and maybe trade it against some stronger currencies. I know that the pound was technically the strongest currency, but it is in that reversal zone when it comes to strength and weakness. So looking at stronger currencies, I can see the New Zealand dollar, I can see the Canadian dollar here being those ones that maybe we get a bit of strength out of. Canadian dollar was in the reversal zone, starting to come out of that now. So I think Kiwi is the main one for me when it looks at kind of currency strength and weakness. Though that market does look pretty nice for a little bit of downside there, and you can see that we're kind of breaking that kind of trend here. If I look at the 4-hour chart, you can see that market was very bullish, higher highs, higher lows. It stuck, and then we broke out of that. So maybe if we get a little bit of a pullback in this 4-hour, have a little look at your lower time frames, like the 30-minute time frame. Get that little pullback, look for that potential breakdown and continuation there. So I'm gonna leave it there. Thank you for watching this video update. I hope you enjoyed it. If you did, like and subscribe, and I'll speak to you very, very soon.